And we start by bidding adieu to 2022 with a big good riddance. Major averages all officially closing out the year with their worst losses since the financial crisis. The Nasdaq down for 4 straight quarters for the first time since the dot-com bust. The S&P dropping nearly 20% for its 4th worst performance since the Second World War.
So the worst stock market in 14 years. What's next in 2023?
The majority of millionaire investors say stocks will be down double digits in 2023.
History shows that the S&P posts gains more than 80% of the time in the year after a drop, and the average return that year is 14.2%.
So first of all, it's worth saying that no one can predict the market. If you just look at 2022, for example, who would have been able to predict that inflation was to go to historic highs?
We've just crossed 9 a.m. everyone. August CPI print coming in at 8.3% year over year versus 8.1% expected.
Who would have thought a Ukraine war would have happened? Fed hikes that are the most aggressive they've ever been, and of course the strong dollar that just seemed to keep going up and up forever. But here are the facts, and hopefully they help you going into 2023 what to expect. So if we take a look at the S&P-Y, not the S&P 500, the S&P-Y was created in 1993, and in that time it has been down 20% or more only 2 times, believe it or not. You'd think it'd be a lot more, wouldn't you? And obviously them 2 times were the dot-com bubble and the Great Recession in 2008. And in the 30 years the S&P-Y has been created, it has been negative 5 times. Those years being 2000, 2001 and 2002, obviously all to do with the dot-com bubble. We had 2008, obviously the Great Recession, and 2018, which was a year that went negative by only a couple of percent. I think it was 4%, and that was mainly due to the back end of the year, where in December the market absolutely tanked. And I remember going through that time frame and just seeing all the gains through the year just totally disappear at the back end of the year. And obviously this year is obviously going to be a negative year as well. But a little bit of stats and facts for you. After these declines, the market actually turned 10% on average the next year afterwards. So on average, after we see a negative market, we do see a 10% return, which is obviously positive. And if we look at the S&P 500, as you would have seen earlier in the video from CNBC, after a negative year, 81% of the time the S&P is up the year after, and the average return in the S&P 500 is 14%. So you can see here, if you look at the S&P-Y, history tells us that after a drop we normally have a good return, and after the S&P 500 has a drop we normally have a good return. And if you look at the issues that caused us to have such a bad 2020, and it is a very long list and I had to short it down. First of all, the inflation issue. Obviously inflation has peaked in 2022, moving into 2023. Now the negative is that inflation is still very high and is still above the Fed's target of 2%. However, what we are seeing is that declining inflation coming lower and lower. So as long as that keeps coming down in 2023, we are moving in a positive direction. The next one is the Fed. Obviously the Fed have reacted to inflation and they have put interest rates at very high rates. Now the worry is, are the Fed going to continue to have these at high interest rates? Or if we do see inflation come down at a rapid rate, will the Fed come and bring these interest rates down? That is obviously something key to be looking. The third point being China. China has obviously been very hard with their no COVID policies, and that policy means that China have been opening up and then locking down very quickly through 2022. Obviously, as we can see from here so far, the expectation is China has decided to now, going into 2023, to scrap all of these restrictions. We'll see what impacts that has and if that continues. But obviously the opening up and shutting down of China has caused problems in the Chinese economy, as well as then impacted other economies and also supply chains. So that looks like it could be potentially resolved, but as we know, it can be quite unpredictable. The next one's freight. Freight has been sky high. We've seen this mentioned many times in companies' earnings. They have said multiple times that freight and shipping costs have gone incredibly high, and this has impacted gross margins. Now what we're starting to see is, as some of the old freight contracts start expiring and they move on to the new freight contracts, what has been happening recently? Well, we can see that the 40-foot containers are now down 80%, which has been one of the main cost increases for shipping at the moment. And we can also see big routes For example, like Shanghai to Rotterdam, are currently down 87% year to date. So we are going to see some tailwinds coming in from the gross margins into 2023. We're also seeing the US dollar. We saw many companies in the back end of Q3 starting to mention about how big the dollar was impacting their earnings. But the US dollar has now been declining, especially when you compare it to the euro. That is now down to the levels it was at 18th of April. WTI, oil has been one of the massive causes of inflation, and what has oil done? It's now back down to levels it was at in October 2021. And obviously, as we look at the Ukraine and Russia situation, that does not show any signs of stopping anytime soon. But what we are overlapping is the year-over-year comps, where we saw many companies starting to pull out of Russia, and that impact that it would have had on their revenue has now totally been digested into those companies' numbers. So that is not going to be an impact on their company's numbers going forward. But there is still concern around companies' earnings decline. Is job losses going to happen? Are we going to see us enter a heavy recession? There is still fears out there, but as you can see, is it a time to be bullish? To me, it looks like we are moving into a better point than where we were in 2022. And what I'll leave you on is this. Is it time to be bullish? Should you be bullish? Why am I more towards a perma-bull stand in the stock market? Well, if you look at the SPY, 25 of them years have been bull years in the stock market. 5 of them years have been bear market. So it pays off to be more bullish than bearish. And when you look at the returns of a bear market to a bull market, the average bear market lasts 1.3 years and the return from a bear market is 38%. If you look at a bull market, the average bull market lasts 6.6 years and the average return of 339%. So to me, it's clear which side I would rather be on, and I know which side I am on going forward and will be forever in the stock market. So let's see what 2023 has for us. JKI Investing, over and out.